What a roller coaster ride the Canadian housing market has been and continues to be so. You're likely watching the average price, which has been falling since February 2022, and are wondering, is now the right time to jump in, or are you better off waiting? Firstly, the average price can be grossly misleading, and I'll discuss on that more in a little bit. If you see the average price drop, you have to dig deeper. And that's because the Canadian housing market is heavily influenced by regional markets, especially localized urban centers. There is a reason you won't see many videos talking about the Saskatchewan housing market because there's not much to talk about because the prices there are just as flat as the prairies. What's happening in Ontario and BC is that sellers are pulling back their listings just because they're not getting any buyers at their asking price. When homes don't sell, inventory piles up. And as the number of homes for sale builds up, people get more and more desperate, so they start cutting back on the prices. This creates a domino effect, which is great for buyers. The other data set that's tied to the housing market is employment, or in today's current housing market, it's unemployment. Most people won't have to sell their homes as long as they have their jobs, and those jobs can continue to support those housing payments. Now, if those jobs don't exist, there's layoffs, there's bigger troubles. If you're a buyer, here are the key 3 signals you want to look out for before you jump in. Number 1, the Bank of Canada is done raising interest rates, which could happen as soon as early next year. Number 2, a continued drop in the 5-year bond yield. Number 3 is that the bond market itself is pricing in interest rate cuts in the next go forward 12 months. These are the key signals that most real estate investors are waiting on because they want to scoop up deals at the bottom of the market. But remember, every serious buyer, whether they're a real estate investor or not, is watching for the exact same signals because they want to jump in and make sure they get the most bargain price possible. Now let's dig right into the numbers so you can see exactly what's happening in the Toronto and the surrounding area real estate market. Here is the Toronto housing market a year at a glance. Taking a look at detached homes on the first portion. What's really interesting is if you take a look at the average 3 to 4 bedroom housing prices, they're both down on a year-over-year basis. For example, if we take a look at 3 bedrooms, 1.4 million a year ago, down to 1.3 million today. 2 million was the average price for 4 bedrooms. It's still at 2 million, but down 2%. Now, if we take a look at 2 bedrooms, you'll notice that there's still a small increase that's holding on a year ago. But if you compare that to 6 months ago, compare that to 3 months ago, it's actually dropping 1.4 million to 1.2 million. Taking a look at townhouses. Because townhouses tend to be more affordable than detached, the year-over-year prices are still hanging on to show increases. But take a look at the 1 bedroom, it's down 9% compared to a year ago, where on an average it was going for closer to 700K. It's down to 631K. But the real stark contrast is 3 months ago. The average 1 bedroom townhouse was going close to 800K. Now it's going closer to 600K. That's almost a 200K drop just compared to 3 months ago. And all this 1.1 million, 1.3, 1.5, on an average 1.3, they're all down just over the course of 3 months. Taking a look at the condo market, because these are your typically first home buyers, they're still hanging on to year-over-year increases. But let's focus mainly on 3 months because that's when we really start to see the drop. A studio was going for 522K, now down to 464. 1 bedroom, close to 700K in just 3 months. Now it's going less than $650,000. A 2-bedroom condo, 954K 3 months ago. Now $882,000. 3-bedroom condo, which was over the $1.1 million mark. Now it's less than 900K. So you can clearly see in just the last 3 months, prices are going down whether you're looking at condos, townhomes, or detached homes. This was just an overview of the Toronto housing market. Let's dig deeper into specific areas to see what's happening in the core areas of Toronto, like Mississauga, Brampton, Milton, and so on. So if we're looking at the GTA, pay attention to the color shaded areas. Anything in the dark red is still above the $2 million mark. And you can see some pockets right here, which will be closer to the $2 million mark. Now, as you get to the yellower, the lighter orange, that's when we see less than $1 million. So for example, here, you'll probably see less than $1 million. And here, probably closer to the $1 million mark is your average price. Let's jump into the first area, looking at Mississauga. The average price for detached, attached, condo, and condo townhomes altogether is now $1.068 million. It peaked at roughly $1.15 million, down over 100K. And in the last month, it's down 2%. And if we take a look at detached homes, that's where you see the biggest drop. the average detached home in January in Mississauga was going close to $2 million. Now you're looking at $1.6 million. That's $400,000 change just since February. Taking a look at condo townhomes in Mississauga, in January it was going close to $930,000. Now that's down to close to $800,000, almost a $200,000 drop. Taking a look at Milton, the average price was around $1.35 million in February of 2022, and now today you're looking at $1.08 million. That's close to a $300,000 drop just in the last few months. If we take a look at detached homes, that's the biggest driver of that drop. It was going close to $1.7 million just in February in Milton. Now you're looking at closer to the 1.3, 1.2, and I'm pretty sure as the months go on, this number is just going to keep falling and falling. And it's not just detached homes that are seeing the drop, right? Just detached homes down 3% month over month. Attached down 7% just in the last month. Condos down 1.4%. Condo apartments down 8%. So you can see every single home type, whether detached, condo, townhomes, they're all seeing significant month-over-month drops. Taking a look at Brampton, if we look at the average price for all homes, it was around $1.4 million back in January 2022. Today, you're looking at $1.06 million mark. I have a feeling by the time we get to August, by the time we get to September, the average prices of the GTA on the west end, whether it's Brampton, Mississauga, or Milton, is going to be less than $1 million. Same story here. Detached homes is what's leading the biggest driver. $1.6 million in February, down to $1.2 million as of July of 2022. Another $400,000 drop in Brampton. Taking a look at Vaughan, the average price is $1.3 million, down from $1.6 million back in February. It's crazy. Like, this drop is crazy, and I'm pretty sure we're going to see it go down and down and down as the months go by. What is the average condo? It's now down to $700,000 in Vaughan, down from closer to $800,000. Just in Vaughan, the average condo is now down 5% in just the last month. Markham, taking a look at the average price, now sitting at $1.2 million as of January, down from $1.6 million back in February. That's an additional $300,000 to $400,000 drop. So clearly you can see that Markham, Vaughan, Brampton, Mississauga, we're all seeing a drop since February in the $300,000 to $400,000 range. Oakville, one of the most expensive cities in Canada, where the average price is $1.5 million. In Oakville, you can see it's down from $1.8 million to $1.5 million. What's really interesting is that it actually seemed a small increase going from June to July. And that's what I meant earlier on in the video, that every single market in Canada is heavily influenced by local areas. So even though you're seeing an increase, that's likely because very few homes are changing hands, so that's what's leading to a small increase. And this could just be a blip in the radar, or it could be something more, but likely we're going to see additional drops in Oakville. If you're interested in living in Oakville, this is something to really pay attention to. What is happening in Oakville that other areas are seeing drops, but Oakville somehow went up 6%. Again, that could just be based on the average homes that were sold. Taking a look at Pickering, sitting around the $1 million mark, down from $1.3 million back in February. Ajax. Now Ajax is down to less than $1 million, considering it was up to $1.3 million back in February. It's dropped. Homes in Ajax are going for, on an average, less than $1 million. Whitby. Now just hang on to that $1 million mark. I'm pretty sure next month this is going to go less than $1 million as well. Click through Oshawa, down to less than $800,000. And just in the last month, it's dropped 6%. Where in January, the average home in Oshawa was going for close to $1.1 million. Now it's going to $765,000. If you're looking for condo townhomes that are considered to be affordable, you can see that there's some levels of affordability coming into the Oshawa region, where the average condo is now going for $600,000. Zooming in directly into Toronto, there are some areas which are still the more expensive sites. For example, Rosedale, the average price is $2 million, which is hanging flat. And again, this is because average prices in local areas can heavily influence what is being sold. If only a handful of homes are being sold, that's going to heavily influence your average price. Staying in Toronto, Toronto Core East, the average price for all homes is now $800,000, down close to $900,000 in April, down to $807,000, down 7% in the last month. Toronto West, $881,000. Lower West, look at that, down 10% in the last month. Now the average price is $1.2 million, considering it was going for $1.5 million in April. That's down $300,000 in the last few months. Taking a look at Let's see, Aurora, 1.4 million is the average price, down 6% in the last month, where the high, you can clearly see it peaked at February at $1.6 million. Newmarket, 1.1 million, down from 1.4 back in February. All around the GTA, you're seeing prices down $300,000 to $400,000. In Toronto itself, based on your localized region, it's either hanging flat or just down a little bit because it's a very localized urban center. If you're looking to buy, whether you're an investor or just looking as a first-time buyer or are looking to downsize or upsize your home, you can clearly see that there are pockets of affordability that are starting to slowly come back. And I'm pretty sure as we see the next rate hike, there will be further price drops. This is why a lot of buyers are waiting, trying to see, is this the right time to jump in? And if you find a home that you feel meets your price point, meets your budget, then it might not make a lot of whole sense in waiting if you feel comfortable going in right now. This is the state of the housing market today. This is the state of the economy today, where the housing prices are dropping, but inflation is still at a 40-year high. Cost of living is just as expensive. And I get asked all the time, what can someone do right now to make sure their finances are still optimized? One thing I do personally is that every dollar that I'm spending is to make sure I'm using a cashback rewards credit card. One great example is the Neo Financial MasterCard, which is focused on getting you the most cashback rewards possible. This is a credit card that's been continuously evolving since it launched back in 2010. The focus at Neo is earning higher cashback at specific Neo partners, which are available from coast to coast. So no matter where you are in the country, you can find specific Neo partners for everyday spending. They have an amazing lineup of partners, and they're constantly adding in new partners to make sure you get the most value for your dollar. Outside of using the credit card at their specific Neo partners, you get to earn cash back on all other purchases as well. You can cash out anytime, whenever you want, and cash back from partners is available instantly. You are fully in control. So who should get this credit card? If you want to support local businesses that are Neo partners, if you want to earn healthy cash back on all your purchases, if you are tired of the big banks, and last but not least, if you want a credit card with no annual or monthly fees. This is a Canadian fintech company designed for today's Canadians by Canadians. You get an average of 5% cash back on Neo partners and a minimum of 1% cash back across your entire monthly spend. There's just so much good value in choosing the right credit card with a good reward system, and that's why I personally use a cashback reward credit card for my monthly spend, especially one that lets you be in more control of your finances by letting you know where each dollar goes. That's a very powerful feature. Thanks to Neo Financial for sponsoring today's video. If you are interested in the cashback rewards credit card, I highly recommend you check out the first link in the description below. As you can see from the data we just looked at across the GTA, we are well under correction territory. And what we're seeing happening right now, I'm pretty sure is just still the early stages, because we have another rate hike that's coming up just around the corner. And I'm expecting prices to still decline, at least in the near immediate term, as the market is still adjusting to all these interest rate hikes. In fact, the downturn can actually intensify as many buyers are right now taking a wait-and-see approach to see the fallout of these higher lending rates. We were in a seller's market for a very long time, and right now sellers are having a very hard time adjusting to today's housing market. If you're a seller trying to figure out what to do in this market, well, you pretty much have two options: either try and experiment and play around with the pricing, or take a look at the surging rental market. Thank you so much for watching. Hopefully you had some meaningful takeaways from this video. Make sure you hit that like, subscribe, and thanks button, as it lets me know to produce more content like this. And last but not least, check out all the links in the description below for some amazing discounts and amazing sign-up bonuses for services I use on a daily basis. That's it for now. I'll talk to you in the comments section.